Hello everyone, welcome to Olives Academy. Today we are going to do WAT Sri Lanka past papers section C question, which carries of 20 marks in total. And in this question we will be given a trial balance. This is a question section C, question number 6, and in this question you will be given a trial balance, and you will be given all the details in the trial balance, and the trial balance will be tallied in both sides, and and there will be some additional information for which you have to take some information for your answer, and you also have to do some adjustments, additions and revisions, and after that yes, after doing all the adjustments, you are required to prepare the statement of comprehensive income, and you are required to prepare the statement of financial position. The statement of comprehensive income carries 11 marks, and statement of financial position carries 9 marks, and total of 20 marks for the whole question. So just let me give a brief introduction about this question with some tips where how to attempt this kind of question. And this kind of question should be attempted from the bottom. Like, you should not come from the top, you should come from the bottom. That means you should be aware of what has been written in the additional information. You should adjust for that additional information in your trial balance. So the first additional information says that the closing inventory as at 31st March 2022 was valued at cost of 8,250. First of all, you have to understand that this cost of the closing stock is not given in your trial balance, where the opening balance is given and the purchases are given, and your closing balance is not given, but the closing balance is required to calculate the cost of sales. So it is given in your additional information. And please note that you should be very careful when you are providing your answers. It should be in thousands, and the currency is rupees. Okay, so let us start to do the questions quickly. All right, the second point says that on 1st of April 2021, that is the opening day of the current financial year for which we are doing this financial statements, a lorry owned by Timira, that means Timira is the owner, where it has been mentioned here that Timira Traders is a sole proprietorship owned by Timira. Timira is the owner, right? So the owner's lorry was transferred to the business, and the value of the lorry as at 1st April 2021 was 1 million rupees. However, this was not recorded in the books of accounts, so you have one work to add this asset, and also with this asset you have to add it to the non-current assets, plus you have to calculate the depreciation expense for 1 year, because this is starting date, and you are preparing the financial statement at the ending date of the year, so that you have to add the depreciation for this purchase. Third one, the policy of the business is to provide depreciation on the straight line basis and cost as follows. Machinery is 10% per annum, and furniture and fittings 20% per annum, and motor vehicles 25% per annum. So you have to do the depreciation based on the percentage on straight line basis as given in the third point. Fourth point says that on 1st April 2021, which is the opening date of the year, Timira Traders entered into a new rent agreement for the office premises. As per the new agreement, monthly rent is 200,000 and rent for the months of April and May 2022 was also paid during the year. That means they have paid 200,000 from 1st of April 2021 to 31st March 2022. Plus, they have additionally paid for the month of April and May also. That is considered as prepayments. So they have paid additionally for 2 months. April and May 2022 is falling after the current financial year for which you are preparing the report. Right. The fifth question says electricity bill of 85,000 for the month of March 2022 has not been paid by 31st March 2022. So there is an electricity bill of 85,000 rupees and this is supposed to be paid on or before 31st March 2022 because this electricity expenses belongs to that current financial year for which you are preparing the financial statements, but they missed to pay it. So it's now accrued expenses, so we can call it accrued electricity bill. It will you know what is the double entry for this, so let us just not waste too much time on that and we'll just go to the next point. So you have to book the accrued expense as well. Right. Sixth point, Thimira has decided to write off 200,000 due from ABC Private Limited as bad debt. So he is a customer. ABC Private Limited is a customer, and Thimira, the owner, has decided to write off 200,000 from his due or from his total outstanding. So this is an explanation for all additional points, and now we'll start to do the question. Right. In this question, first of all, I have divided the screen to understand for you. So here is a trial balance for you. Here is a working for that. And first of all, before starting to do the question, you have to put the Thimira Traders, the business name, and what kind of statement that you are preparing, which is statement of comprehensive income. That is the first question for 11 marks, and you have to prepare for which year you are preparing this. That is for the year ended 31st March 2022. This format I have already written, so you should be familiar with this format. So whenever you see this kind of question, you should be immediately start to draw this format, so that will be easy for you and time saving one if you can draw this while doing your easy questions, because this section she is the end of the question, so it might take a lot of time and it will consume a lot of time, so that you will be not able to do it properly. You will do it in a rush, and sometimes there are high possibility for being mistakes in your statement and calculations. So try to do it early as possible. Right. So here let us focus on this. Okay, so here you can see here they are telling about sales. First of all, in your statement of comprehensive income, this is the format. First you have to put the sales, then cost of sales, where how to calculate the cost of sale: opening stocks plus purchases less your closing stock, then you get the cost of sale, then you get the gross profit. So I'm sorry, I forgot to put that gross profit. So you get the gross profit. Okay, so you get the gross profit. Gross profit is sales minus the cost of sale. Then you get the distribution expenses and administration expenses. Then you get the finance expenses. Then you get the profit or loss for the year. Right. Let us start to do this question. First of all, you have to put the sales. How much is the sales shown in the trial balance? You can see here sales. Sales is, it's very easy, just indirectly you can put it as 202. Right. Then next, the opening stock. Opening stock, can you see the opening stock here? Now this is finished. Okay, this is finished. Okay, now you can see the opening stock. Where is the opening stock? Opening stock here. Inventory as at 1st April 2021 is 13,950. The opening stock is 13,950. Right? That is opening stock is done. Now you have to take the purchases. How much is the purchases? You can see purchases 124,000. So it's 124,000. Right. Then now you get the total of that. What is the total? Total of this plus total of this, you get 137,950. Now you have to less the closing stock. What is the closing stock? Closing stock is not given in your trial balance. It is given under additional information. That is this. The closing inventory is 8,250 because you have to put it in thousands. So 8,250 is your closing stock. So 8,250. This is less. You have to less. You have given here. You have to less the closing stock. Then you find. Then you add. Get the net value of this. Then you get 129,700. So your gross profit will be 202,000 minus 129,700. So 72,300 is your gross profit. That is finished. Right. The next one is the distribution expenses. So for the distribution expenses, you can do a working here. In this working, you will be doing the working for the distribution. So let us do the workings here. Working. So what are the expenses that will come under distribution? You can take distribution expense. Mostly these expenses are related to the sales. That means to make sales, what are the expenses that are incurred? But sometimes it depends on how you classify the accounts to calculate the distribution expenses. But normally distribution expense is calculated related to the sales, like how much. This is not a written law, but normally that is the case. So in working one, you can put purchase discount given. You can put the discount given. Discount given. How much is 4,000? Right, 4,000. 4,000. And that is finished. And after that, come here, electricity service, overdraft, bank loan, traveling and transport. Yes, you can put this traveling and transport in. Traveling and transport is 7,200 here. This one. Then office rent, no. Then what else you can put it and put under distribution expenses? Other than this, under distribution expenses, you can put under additional information. They are saying that depreciation of motor vehicle. The depreciation of motor vehicle, that is how much? That is 1 million for 1 year, okay, because they are telling it's for 1 year, okay. So 1 million, that means 1,000 into 25%, that is 250. So 250 also a depreciation expense. Then what else you can put it under? Distribution expenses. So after that, you can put the under distribution expenses that can you put the monthly rent? No, you can't put monthly rent. You can put electricity bill? No, you can't put. Write off. So this right. So what else that can come under distribution expenses in working one would be, let us just go to the question and see, is there anything that that we can add to the distribution expenses. Is like nothing, we don't have anything, so we have added everything, but except one thing. You can see under the additional information that we have already added certain things, and you can see that electricity is not a distribution expense, it's an administration expense. And rent here, that rent agreement, that is also administration expense. Then Timira has decided to write off 200,000 due from ABC Private Limited. Now in this case, that ABC Private Limited is a customer, and the Timire has decided to write off this 200,000 rupees from ABC Private Limited. So that is, we call it bad debts. So in this bad debts is 200,000. So altogether that we are seeing now here is working one, that is distribution expenses. So let us see the total of that. So 11,650. This 11,650 is the total of distribution expenses. So we put here 11,650. So here it will be, we don't need we don't need this actually. We can see here that 11,650 is the distribution expenses. So plus, let's see how much is the administration expenses. We can have working two for administration expenses. So under administration expenses, if you go to the trial balance and see what are the contents that we can take under administration expenses, the first one we can say electricity. Electricity expense is an administration expense. Right, electricity expense. Then salaries and wages. Salaries and wages. Then overdraft interest, no. Bank loan, traveling and run, office rent. Office rent is an administration expenses. Now in electricity expenses we have 3,250. So 3,250 is the electricity expenses. Salaries and wages 42,000, and office rent is 2,800. Right, now let's see. Right, so in this case you can see that there are some adjustments, that office rent is finished, and salaries and wages we have included. So there are some adjustments to be made. Just go to the additional information and see is there anything related to administration expenses. The first one is rent. If you take the rent, is there anything about sorry for that, let's see electricity. Is there anything about electricity? Yes, electricity bill of 85,000 for the month of March 2022 has not been paid by 31st March 2022. So they have not paid, right? They have not paid. So what we have to do with that? It's an accrued expenses. Still we have to add it for the month of March, because 2,800, sorry, the electricity expense of 3,250 is added with the 85,000 of accrued expenses. So 3,250 is added with 85,000, that is plus 85. So the the electricity will be 3,335. Then after that, if you take anything salaries and wages, is there any additional points for that? No, there is no additional points for that, so just leave it. Then come to the office rent part. The office rent part is they are telling that 1st April 2021, Timira traders entered into a new rent agreement for office premises. As per the new agreement, monthly rent is 200,000 and rent for the months of April and May 2022 was also paid during the year. So in this case, you have to understand clearly that we are required to do this statement of profit and loss for the year ended 31st March 2022. So all your calculations and results should be as on that date, which is 31st March 2022. But if you look at this additional information number 4, it says that April and May 2022 was also paid during this year. That means this office rent of 2,800 is included with the next year's 2 months rent expenses or rental amounts. April and May 2022 is after 31st March 2022. That means it is a new financial year. So if they have paid for the 2 months from the new financial year, that means that they are paying in advance. That is called prepayment. So in this case, if your trial balance is included with the prepayment, you have to remove that from the total balance and you have to transfer it to the next respective months. That means April and May. So here office rent 2,800. What we have to do is that you have to deduct 2 months rent, that is 200,000 per month. So 2 months is 400,000. So your rent expense will be 2,400. After that, so your adjustments are done now. Now after that you have to add some more things. What is that? That is your depreciation. Your depreciation is for machinery and furniture and fittings. So you have to add the depreciation. So we'll add the depreciation. Depreciation of machinery and depreciation of furniture and fittings. Furnitures and fittings. So how to calculate the depreciation of machinery? The policy of the business is to provide depreciation on the straight line basis at cost as follows. Machinery is 10%, furniture and fittings is 20%. So we will see the cost of the machinery and furnitures and fittings. The cost of the machinery, property, plant and equipment at cost. The machinery cost is 2,000. So 2,000 into so what is the percentage? I'm sorry for that. 2,000 into the machinery depreciation is 10%. That is 200, right? Plus depreciation of furniture and fittings is 800 into 20%. 20% is the depreciation amount. That is here. Machinery is 10%, here 10%, and furnitures and fittings 20%. So we add 20%. And finally, we see what is there any other things to add? Nothing is there to add. We have taken everything from the trial balance. So just take the total of that. If you take total of that, you get 48,095. 48,095, right? So you add it to your administration expense, that 48,095. So what you have to do is simply you add this both. Okay, at this both you get 59,075. So this should be a minus figure, right? So you have to deduct. Then after that you come to the finance expenses. What are those finance expenses available? Is there any additional information for the finance? No, there are no any additional information for finance. So what you have to do directly, you have to take what are the finance expenses available in this trial balance. Just go here, bank overdraft. This is a finance. So bank overdraft. How much is the bank overdraft? That is 1,050. Is that correct? 1,050, is that correct? No, that is not bank overdraft. That is bank overdraft interest. So you should be very careful when you are making this bank overdraft interest. That is 500. Then bank loan interest. Interest is an expense. Okay. Bank loan interest. Interest is 1,100. So you get a finance expense of 1,600. That is here. Add this both, that is minus figure. Finally, you have to get the sum of this gross profit minus distribution expenses minus administration expenses minus 1,600. Since these all are in negative figure, you have to add it in the Excel. So I hope you understand this, or else I'll just explain you in this way. Okay, let it be in positive figure. So let me explain you in a direct way that is most comfortable for you. And 72,300 is the gross profit minus distribution expenses and administration expenses is altogether 59,745. So minus this, minus the finance expenses, you get 10,955, which is a profit for that year. Hope you understand this question, and we will do the statement of financial position in the next video. Thank you very much.